lower tax rates, higher interest rates, less regulation. At least the prospect for all three has added up to a great rally. The question is, do you buy them now?
Well, the answer is you have to continue to stay the course and own these companies, because the one thing you did leave out was less regulation and a much stronger economy, potentially much faster GDP growth, caused by less regulation in other industries and caused by an environment where lower tax rates for others to reinvest in their business. So I think you can continue to own financials, and in a rising rate environment, financials always outperform the S&P as a whole anyway.
Right. Give me some fundamentals here in terms of where we are on multiples, where you expect we'll be in terms of earnings, given the scenario you just outlined,
Sure.
and also return on equity for this group as well.
So, if you look at the current multiples, and most analysts haven't adjusted for any of these impacts yet, if you normalize for a lot of these impacts, particularly a tax rate that's much lower, you're talking about regional banks trading about 12.5 times earnings. So if you look throughout history, that's really kind of in the middle of the pack of where regional banks have traded. So, no, they're not very expensive on a price-to-book basis. They're trading at a higher multiple, but again, return on equity is going to move dramatically off these low single-digit numbers into the low to mid double digits. So again, massive improvement in terms of the financial outlook.
Anton, Steve Eisman was on CNBC recently, aka Mark Baum. Steve Carell was the character in The Big Short. Yeah. He was saying that we are entering a golden age for the banking sector, a golden age of investing in financial stocks. That certainly gets your attention. But as an investor in these stocks, are you concerned at all that this is becoming a pretty consensus-type trade going into 2017?
Well, I still think they're under-owned, and the thing that I've always done throughout my career is look for, strategic changes in companies and mergers and acquisitions. So if you remove some of the regulations that have been hampering transactions, i.e. the $10 billion level for Durbin and DFAST and the $50 billion level for CCAR, you could have a lot more activity, happen in more mid-cap banks in terms of M&A, and I think you could create a lot of value from those kind of transactions. And we've started to see some companies use their stronger currency to create value. IBTX in Texas did a very smart deal. It was immediately accretive to book value, immediately accretive to earnings. So I think you see those kind of transactions out there that are smart and create value for shareholders. So I think there's a chance for these companies to use those currencies and create value.
Right. Now, I assume you're not talking about something akin to the great consolidation wave we saw in, let's call it, the 90s and early aughts, but you're talking here more mid-caps and the regionals as potential consolidation candidates?
Yes, exactly. Because if you think about the top four, Citibank, Bank of America, J.P. Morgan, Wells Fargo, they're out of the acquisition game. They're not doing anything. U.S. Bancorp, which is just below that, hasn't done a deal in a while. They can. PNC, BB&T has done a bunch of deals. Regions, SunTrust. So they can all be involved, and they're all going to get bigger. And then down below that, you have companies like Huntington, which just closed a deal, and First Horizon. So you're going to see a lot of regional guys getting together and getting bigger and stronger when some of these regulations go by the wayside. And none of those regulations had anything to do with causing the crisis. I think the big banks still are going to have to carry too much capital. Fair enough. I think that capital guards against any sort of risk. They're probably going to have to carry more liquidity. But some of the other rules that really had nothing to do, maybe in Volcker as well, may go by the wayside pretty easily.
We'll watch for some specifics on that front, Anton. We mentioned a number of headlines out of Europe this morning, seemingly positive ones for European banks. Deutsche Bank finally a settlement at half as much as it was expected. Credit Suisse makes a deal. Barclays not so much, but looks like Italian banks are going to get a bailout. Does all of this remove some sort of layer of uncertainty for the U.S. banking system? We know how interconnected it was, although haven't seen much of a reaction there.
Yeah, I mean, I think at the end of the day, most people have sort of looked at the U.S. banking system, having spent a lot of the last few years, making sure they insulate themselves from some of the issues that were obvious. Obviously, some of those Italian banks have been obvious for a number of years. And, hopefully some of these settlements, lead the way for the European banks to start to recapitalize themselves. I'd love to see Deutsche go out and raise a whole lot of capital now that we know exactly what their fine is. and certainly, Credit Suisse ought to certainly also do some of the same things. The Italian bank's going to need a lot more capital than the Italian government's promising here, but it's a start, and it's a positive start, and we need to, put a lot of capital in the European banks. I mean, particularly the Italian banks.